This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. oil companies are working around a century-old shipping law to supply fuel to the U.S. East Coast, according to data from Refinitiv and oil trading sources, as high demand for gasoline and global disruptions in fuel markets sent prices higher. Traders are increasingly sending unfinished gasoline components from the Gulf Coast to Buckeye Partners LP's terminal in the Bahamas, also known as Borco, where they are blended into finished gasoline to be sent to the U.S. East Coast. The uncommon trade is a sign of heavy demand for products up and down the coast, home of some of the nation's largest consumer markets. The trade represents a legal workaround to the Jones Act, which requires goods moved between U.S. ports to be carried by ships built domestically and staffed by U.S. crew.
U.S. crude oil refineries plan to keep running near full throttle this quarter, according to executives and estimates, as refiners set aside worries about recession and sliding retail prices to deliver more fuel. The operating levels will keep U.S. gasoline prices below their spring highs while providing strong earnings to refiners, analysts said. Many aim to run at rates similar to the second quarter's 94% average utilization rate. Refiners will continue to run hard in Q3, Tudor, Pickering, Holt refining analyst Matthew Blair said in a note this week, adding he would not be surprised if Q3 runs weren't higher than June given past conservative forecasts.
Moving on to the top news in the energy sector.
China's July gasoline exports rose 19% over a year before to a three-month high, data showed on Thursday, as refiners took advantage of new quotas to send more fuel abroad and ease bulging domestic stocks. Gasoline shipments totaled 880,000 tons last month, the highest since April, although year-to-date volumes remained 37% below the same year-ago period, data from the China General Administration of Customs showed. Exports of diesel and aviation fuel, however, took analysts by surprise with volumes much lower than their forecasts.
A major expansion in tax credits for companies that capture and store carbon emissions under U.S. President Joe Biden's new climate law could be a boon to the ethanol industry as it seeks to meet its mid-century climate goals. The Inflation Reduction Act, IRA, Biden signed on Tuesday significantly expands tax credits for industrial projects that capture emissions of carbon dioxide, the main gas blamed for climate change, and either store it underground or use it as a building block for other products. The industry hopes to use carbon capture and storage, CCS technology, aided by a network of carbon transport pipelines across the Midwest, to reach a goal of net zero emissions by 2050. The technology could help ethanol makers position their product as a green fuel against the backdrop of transit electrification. Next, we have the top news in metal markets. China's aluminium imports in July slid 38.3% from a year earlier, government data showed on Thursday, as domestic production rose to a record and overseas supplies tightened. The country brought in 192,581 tons of unwrought aluminium and products, including primary metal and unwrought, alloyed aluminium, last month, according to data from the General Administration of Customs. The fall in imports was partly attributed to a rise in domestic supply this year. China, the world's biggest metals producer and consumer, made a record 3.43 million tons of aluminium in July as smelters did not have to contend with the power restrictions imposed last year.
Swiss exports of gold to China in July rose to their highest since December 2016, Swiss customs data showed on Thursday, as demand in the world's largest bullion market improved. Switzerland shipped 80.1 tons of gold worth 4.4 billion Swiss francs, $4.6 billion, to mainland China, up from 32.5 tons in June and the second highest monthly total in figures that stretch back to 2012. Gold prices slipped below $1,700 an ounce in July from more than $2,000 earlier in the year as rising interest rates triggered selling by Western investors.
We will now look at the top news in the agricultural sector.
The International Grains Council, IGC, on Thursday cut its forecast for 2022-23 global corn output, largely driven by diminished prospects for crops in the European Union and the United States. In its monthly update, the intergovernmental body downwardly revised its 2022-23 world corn, maize crop outlook by 10 million tons to 1.179 billion tons. The IGC also raised its forecast for wheat production in the 2022-23 season by 8 million tons to 778 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.